Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for December 1st, 2019. I'm actually filming this just a little later than I normally do due to some conflicts in my schedule this morning. So I hope this video finds you fine ahead of the FX market open. Matter of fact, some of the prices are actually moving as I speak, but nothing exciting is gapping in the market. Now, before I get started on the analysis and what we're looking for in the week ahead, let me mention that tomorrow morning at 6 a.m. Eastern, so depending on where you're at, I gotta think about that for a moment. But at 6 a.m. Eastern, we're going to be doing our Cyber Monday sale, which is a buy 1 month, get 1 month free of ForexAnalytix. This is the perfect time to try out ForexAnalytix. Typically, December has a lot of volatility, so why not use our system? Buy 1 month, get 1 month free, be able to download the mobile app and have all of our analysis and updates right to your phone and mobile device and right to your desktop as well, and be able to be interactive with our chat room and our community. So this is a great opportunity for you guys. So make sure you take advantage of the buy 1 month, get 1 month free Cyber Monday offer. It will be available Monday, Tuesday, and Wednesday. All right, so take advantage of it. Right now it says, try it $1 for 10 days, which you're more than welcome to do so right now. But once that Cyber Monday offer goes live, you will not have the ability to try it out for $1. It's just buy 1 month, get 1 month free. And I know a lot of people wait around for that deal because it's a good deal and they know they want to be a part of our community. So it's a great opportunity for you guys to take advantage of. All right, so let's talk about this next week and what we've got upcoming, because there's a lot of events. And one thing that I want to say is December sometimes can bring us a little bit more volatility. And let me move the data flash out of the way. This is part of the ForexAnalytix system. By the way, you get the data flash so you can see when upcoming events are happening, and you get notified right when those releases take place. It's since I do use Bloomberg as well, I want to say it's pretty close to Bloomberg speed. So it's a really good feature that we added to ForexAnalytix. Excuse me. Now let's go back to December. December, like I said, we can see some volatility in December, which would be good because volatility in the FX market has been very low as of late. I was actually looking at the at euro volatility over the last few years, and it's dropped off the face of the planet. We are in multi-year lows with euro volatility. That means the FX volatility is very quiet. When us as traders, we tend to love more volatility to give us more opportunities. And right now, volatility is at, like I said, multi-year lows. And I'm not sure if that's going to stay through the month of December. The market is kind of paralyzed as we're waiting for a China-U.S. trade deal to emerge. There was a Global Times article this morning that says that it might not even happen before Chinese New Year, which is in January, which let's all hope that that is not the case. But between that and Brexit, the election that's happening mid-December, we could see volatility pick up this month, and let's really hope so. I'm gonna show you really quick before I get to some of these charts that on what we're looking at in as far as ForexAnalytix goes, and some basic analysis of some of these major currencies. I want to take you over to not the peso. I want to actually take you over to the commodity currencies. I don't know if you guys recall last year. Take a look in the month of December for the Aussie and the Kiwi in particular, and the Canadian. I'll show you all three of those. Look at the month of December here last year. The Aussie fell off the face of the planet for reasons we do not know. And actually, if you look at the previous month of December for the Aussie rallied uncontrollably for reasons you do not know either. It seemed like it's end of year, end of year demand, or for selling demand and buying demand for the Aussie. But the Aussie, look at the volatility. It just tends to pick up in the month of December. One thing that I'm trying to point out here is if you are watching the Aussie dollar or any other currencies for that matter, and you see a trend that starts to develop, one thing that I've noticed is try not to fade those moves, especially if the momentum starts to pick up in some of these currencies, because you know, if you stand in the way, you might get run over. So it's kind of one of those situations where you might want to get on the bus or get out of the way type of things. Take a look at, you know, this is the Kiwi. Take a look at December of 2017, right? Actually, I think I extended that a little too far, but you can see here's the month of December right here. I'm trying to grab it here. Okay. Basically this is the month of December, and then you can see January as well. Let's go to December of this last year. You can see that as well. See how the, you know, there's just, it's like one-way moves in the Kiwi. Again, the Aussie, very similar situation. I think I might have extended that out too far. I did. So, but you can see the month of December right there. All right. And then obviously we went into the month of January, follow through, and then reversed for, you know, no reason. But there's the month of December last year. And take a look at the Canadian. Very similar type of situation. Let's see right here. Month of December, basically. And then previous year, somewhere around here. Okay. So again, what I'm trying to point out is that you can see some volatility and some extended moves, some you know, trends develop in the month of December. It doesn't mean they're gonna continue going into the month of January, but it's just something to be aware of. Now, one of the things that that if you think about the month of December, we have just this week, matter of fact, we have the RBA decision. Okay, and then we have also the Bank of Canada. Now, I'm not expecting, and we're not expecting the RBA or the BOC to actually change rates, but just because they're not adjusting rates doesn't mean that you can't see a move start from central bank, you know, hawkishness or dovishness. So that's something just to pay attention to. On Monday we have the RBA, and on Wednesday we have the Bank of Canada. So just keep that in mind. Now, as far as the rest of the majors go, it was a really quiet Thanksgiving, U.S. Thanksgiving week last week. It was quiet. The market didn't move a whole lot. We got a little bit of end of month activity on. We got a little end of month activity on Friday, and you saw some dollar selling. Most of the brokerage firms were saying that their end of month was going to be dollar selling, and it actually, you know, we thought it might come through on Wednesday, but it actually ended up coming through on Friday. But one of the things about the euro that you'll notice here is you'll see that 618 retracement that comes in at 109.90. Basically, I was thinking that we might get down to 107, 109.70, which would have been the double top completion, which doesn't mean that we can't get down there, but because we put in a false breakdown on Friday, that's something to keep in mind. If the euro dollar makes it above 110.50, that would probably be a fairly bullish event for the euro, meaning that if you get a false breakdown, it tends to lead to a reversal. False breakouts to the upside tend to lead to reversals as well. So considering the fact that we made a false breakdown on Friday and then we reversed higher, we should be aware that if the euro breaks back above like the 110.50 level, that might allow us to get a move back up to 111. And if we get, you know, much past 111, then you're talking the 200-day moving average, which comes in around 111, you know, 111.60. Now, since euro volatility has been so suppressed for the last, you know, couple of years, I'm not expecting a breakout, but the breakouts that you get in the FX market very rarely occur when you think they're going to happen. So always we have to be on guard as we approach key support or resistance levels. And in this case with the euro dollar, if we get towards the 200-day moving average, or we get towards this 111, you know, it's like 111.80 ish, we get up there And if we start breaking out, you have to, have awareness, because when volatility is super low, once it spikes, that's when you start to get explosive moves. Like I said, I don't know if it's going to happen this week, but we have to be aware of the potential, and there could be a catalyst, whether it's trade related news, whether it's Brexit related news. Those are all events that are very fluid, that are coming up really quickly, as we approach the end of the year. So just a little bit of food for thought with the euro. Now, talking about the cable and talking about Brexit, what we've seen with the polls that came out over the weekend, the race has gotten a little tighter, and Johnson's party is not as ahead in some polls that came out over the weekend, which, again, it's very fluid. But as far as the cable goes, if you start to see a breakout above, let's just call it 130, then we have 130.30, which is really key resistance. But once you get above 130, things get a little, I would be a little nervous if I was short. So, and it's not just the pound. Excuse me, want to turn your attention to a couple other cable pairs. Take a look at the euro pound. Let's go over to the weekly chart with the euro pound. You notice we're approaching this 85 pence level, huge support. We get below there, there's got to be a lot of stops below 84.90, and we start breaching those support levels. That's probably signaling that the euro, or excuse me, that the pound is above 130. That's something to pay attention to. Also, it's not just the euro pound, it's not just the pound dollar or the cable. Take a look at the pound Aussie and the pound New Zealand. The pound Aussie closed above 191, which is bullish in itself. We closed above 191 in breakout territory. This is, and actually, let me see if I can get enough information. Yeah, here we go on the weekly chart. Oops, let me get over. Dang it, that's not what I want to do. Here's the weekly chart. Okay, here's the weekly chart. If we start breaking above, this 192, 193 level, and then 196 is a big monthly 618 or weekly 618, you can start challenging too in the pound Aussie. And it's not just the pound Aussie. It's not just the euro pound. Look at the pound New Zealand. Pound New Zealand has a lot of upside here. We've been consolidating above 2, and we had a brief dip. Let me go over to the daily chart. We had a brief dip below 2, so we had a false breakdown. So a breakout above like 203, 203.50, that would be bullish. I mean, we could be at 205, 210 pretty quickly. And again, this is all what I would really be paying closest attention to. Obviously, we're going to be looking at the polls, but if the market starts looking at the potential for Bojo's party to really have a majority, we could be trading above 130. And if we trade above 130, you might start looking at, if you don't want the dollar in any equation as far as what you're trading, you could start looking at the euro pound, pound Aussie, pound New Zealand. Those are currencies that are threatening breakout or breakdown situations. Breakdown in regards to the euro pound, breakout towards the pound Aussie and pound New Zealand. One last currency pair I'd love to bring to your attention today, and we, like I said, we were discussing, the Canadian. I'm not really super excited about the Canadian dollar. I haven't been in recent months. The one thing I think we should look at as far as the Canadian dollar is just this big resistance that comes in at 133. I think it's about 133.50. Big multi-year trend line that comes into play. That's obviously something that we need to be aware of if we make a move to 133.50. But that's not the pair I wanted to show you. I really want to talk about the US dollar Japanese yen. And matter of fact, I'm going to do a little bit of drawing here with you guys. So let's pull up the US dollar Japanese yen. And we had this big inverted head and shoulder pattern. You see it? This is a daily chart, big inverted head and shoulder pattern. Here's your shoulder, here's your shoulder, here's your head, here's your neckline. And really, if we broke out, you're talking 114 on a real big breakout, right? 114 and change. That's if we really completed our whole inverted head and shoulder pattern. Let me delete that really quick. You'll notice this downtrend line comes into play around 110.50 ish, somewhere around there. Okay, 110, 110.20, 110.30, I guess. But one thing that has me a little concerned about the dollar yen, and it's been concerning as if you listen to the daily face webinars. This is our one of the biggest contentions I have with the current rally in the S&P is the S&P continues to rally to all-time highs, and the question that I've been asking is, why isn't the dollar yen much higher? And maybe the dollar yen can play catch up. I mean, if we have a China US trade deal that happens, and let's say the deal looks better for the US than had anticipated, maybe the dollar yen will really reciprocate and start to play catch up. But the flip side to that is, what if China continues to drag its heels and maybe a deal doesn't get done, or maybe the deal that gets done is not quite as good for the US as the market had anticipated? Well, given the fact that the dollar yen hasn't rallied, then it becomes a risk to to dollar yen longs, especially the fact that we're just not getting a big follow through above this 109.50. What I'd be worried about if I was long, which I'm not, but I'm just saying, is if we drop back below the 200-day moving average, because what would happen is then you have, and just follow with me. I'm giving you the if this then that type of situation. If the dollar yen fails, then you have a false breakout here, and a break back below 109 or the 200-day moving average, in my opinion, would probably bring in some pretty big selling pressure. You think about all the people that have been long the dollar yen going into this supposed China US phase one trade deal. Let's say it just doesn't come to fruition, then you're going to get a lot of frustrated longs that say, you know what, I don't want to even be long anymore. So then a break back below that 200-day moving average could be quite bearish for the dollar yen. So I think that's something that we need to pay attention to. Not saying that I'm going to run out and short the dollar yen. I actually tried to play the dollar yen on the short side last week. I think my cost average was like below 109, and I closed it 30 or 40 pips higher because I didn't want to be stuck in a squeeze if we really broke out. But the flip side to that is how many people have been squeezed out of their shorts, but more importantly is how many people are long. So if we get a failure on the long side, which this whole year has been a bunch of false breakouts, false breakdowns, if it leads to a reversal, we could see something fairly substantial on the downside if that does come to fruition. So again, it's a lot of if this then that. So if we get a failed breakout here, then that could be a move lower. So again, these are things that you don't want to be caught off guard. You want to keep your eyes open. I know volatility has been very low, but we are into the month of December. There are going to be end of year flows. You are going to see, like I had showed you with the Aussie, the Kiwi, the Canadian, we have seen some higher volatility in the month of December. The last couple of years could play into this year as well. So again, don't think that oh, it's the month of December, everybody's getting ready for the Hanukkah and Christmas holidays, so there's going to be no liquidity, and there's not going to be a lot of movement. That has proved not to be the case the last couple of years. And I think in a period of low volatility, there might be some that we've seen the last couple of years. We might see more of an explosion in volatility this year, especially with Brexit and China-U.S. trade negotiations. Last couple of things I wanted to bring to your attention. If you want to see what's happening this week, for the market, you can just go here on ForexAnalytix and you can go through all the events that are happening this week. You can just scroll through here. I'm going to just highlight a couple of the big ones. So we do have this evening in China, which would be Monday morning in China, we have manufacturing PMI that's going to be released. Tomorrow, early morning, you're going to have manufacturing PMIs in the UK. You have some manufacturing PMIs in the Eurozone. ECB President Lagarde, she is speaking. She has given us no indication about monetary policy, nothing substantial, but that doesn't mean that can't change tomorrow morning. So tomorrow morning, I think at 10 a.m. Eastern, we're going to see the ECB President Lagarde. She is speaking, so might see some volatility. We have ISM manufacturing data because we're going to start to see some ISM data this week because it is non-farm payroll week for the US. We do have RBA decision tomorrow night or Tuesday morning if you live in Australia. On Tuesday, excuse me, we have Australian GDP, which is actually Wednesday morning in Australia. We have services PMI out of China Tuesday night, or again Wednesday morning if you're in China. Wednesday we have ADP non-farm here in the US. We have the Bank of Canada rate decision. We also have the ISM services data being released Wednesday morning. And then we have retail sales out of Australia Wednesday night or Thursday morning if you live in Australia. Sorry, I'm not actually scrolling through this. I'm actually just reading some notes here. And then on Friday we have employment data from not only the US but also Canada. All right, so both Canada and the US are going to release employment data. And again, if you're looking at the Canadian, that's a perfect setup for, do we break up or do we break out or do we reverse at the US dollar Canadian 133.50 level. Again, this is going to be, and this is my live chart so I can show you here real quick. Huge resistance right here in the dollar Canadian, this 133.50 level. Remember, that's a multi-year trend line, right? It spawns back from 2000, I guess that would be 2016, all the way to current time. Would the U.S. Canadian jobs data on Friday, maybe that is the catalyst that potentially drives the U.S. dollar Canadian higher? All you have to see there is stronger U.S. data and weaker Canadian data, and if we're flirting with that resistance, that could spell a big breakout. Anyway, again, just a few things that I wanted to bring to your attention, and guys and gals, a couple other things. If you're watching on YouTube and you think this video is going to be beneficial for you going into this next week, make sure you give us a thumbs up. Make sure you subscribe to our channel. This way you don't miss any of the wonderful interviews that Dale Pinkert, our host for the FACE webinar, puts on every week. Also, if you've been waiting to try ForexAnalytix, do it tomorrow. It's a Cyber Monday deal. Buy 1 month, get 1 month free. That's 50% off for 2 months. That's a huge deal. So take advantage of our offer. It's good till Monday, Tuesday, and Wednesday of this next week. And remember that offer will go live tomorrow morning, 6 a.m. Eastern. My name is Blake Morrow, and I hope you enjoyed this week's Ahead video. And I'll look forward to seeing you on tomorrow morning's FACE webinar. Have a wonderful, wonderful week if I don't catch you until next Sunday. Thanks again for listening in. Have a great day.